What we do know is that Trump's agenda is inflationary. And there's a lot of goodies promised to a lot of people. I hate taxes. I'm all in favor of people not having to pay these taxes. But if they don't come with budget cuts, real budget cuts, I mean, if Trump does go all in on the government and does fire some people, but not really enough to make a difference, you could cut all federal salaries. And it wouldn't matter if the interest on the federal debt, goes up again. It could be swamped in that. So making the real changes, the real painful changes, touching the third rails of politics, that would be really difficult. And not doing that while cutting taxes just makes the fiscal situation worse.
Hey guys, welcome to Capital Cosm. Today's guest is Lobo Tiggre. Lobo, thank you so much for coming back on the show.
Happy to be with you on Fed Day, Danny.
Yes, sir. Let's just dive right in, Lobo. What is top of mind for you? It appears to be Fed Day, so let's talk about that. What you got? What is your top radar for you right now?
I don't know that I have anything breathtakingly original to say. I do think that Powell has kind of painted himself into a bit of a corner there. If he doesn't do what's been so widely telegraphed, that will be seen as political. So whether it's the right thing or not, I think we probably get 25 basis points. We'll know just about as soon as we stop recording. Very risky to make a prediction right on the event, but right or wrong, that's how it looks to me. Anything else rocks the boat. But I think more important is I really think that we are down to the nub here. The rubber has hit the road. We've seen not just signs, but we've seen cracks and spreading cracks in the labor market. Yes, we had a blowout jobs report, the month before, but that went to almost zero, basically zero for the latest one. And everybody says, it's the weather, it's the hurricanes. But no, the hurricanes don't make 250,000 jobs disappear all at once. Oh, and by the way, they don't make 112,000 jobs get revised out of existence for the preceding 2 months, right? So it's not just the hurricanes, it's not just Boeing. And by the way, usually when there's a natural disaster, you have all these Keynesian economists out there falling for the broken window fallacy, talking about how wonderful this disaster is because it's going to create all these jobs. It's the Krugman mentality of an alien invasion would be great because it would create all these defense jobs, right? But somehow this time that wasn't the narrative that circulated. So I'm calling BS on that. I do think that the labor market is showing signs of distress. The plurality of the data is negative. And you can spin that. You can look the other way. You can say, I'm not listening. But either I'm right or I'm wrong. And that's what I'm saying here. We're down in the moment. It's very rare for me to, make a prediction like on Fed Day like this. But I really think that in the very near term, like this month and next month, we'll see that either I'm right or I'm wrong about this. If I'm right, it's very bullish for monetary metals, gold and silver. Uranium does its own thing anyway. But it's bearish for industrial metals, copper, nickel, lithium, what have you, and oil as well. If I'm wrong and Powell has kissed the boo-boo and managed the soft landing and it's happy, happy, joy, joy from here forward, then I'm wrong about industrial minerals. And any that are on sale now, which we just got a big bout of volatility on the U.S. election results, that's absolutely a buying opportunity. If I didn't think I was right, if I thought Lobo was wrong, I would buy oil and copper stocks right now. But I think I am right. So I'm going to wait to see how the labor market shapes up and whether the U.S. is as shaky as I think. I mean, the news could barely be worse out of Germany. and what we're seeing out of China is really telling as well. The latest number I thought was quite interesting. A record trade surplus for China. Whoa, that must mean the global economy is humming again. Well, not necessarily. The record trade surplus, it's a balance. And the exports were up, but imports were way down. Well, if the global economy was booming, why would China be cutting back on imports? That makes no sense.
Right.
I think it's more likely that the Chinese are trying to sell everything they've got that's made before Trump slaps them with 60% tariffs or 100% tariffs or whatever. So, sorry, I'm going a bit long, but this is the macro question. So this is the macro answer, right? I think that there are data points here and there that are contra Lobo that say maybe I'm wrong. but most of the data tells me that I'm right, and that we're at that point now where it'll be obvious soon, I think, whether I'm right or I'm wrong. And again, main takeaway is either of these are bullish for gold and silver. It's either inflation right away or inflation soon. And if I'm, that's if I'm wrong. If I'm right, it's maybe a bit more deflationary pressure in the near term as we grapple with the bad news for the US economy, joining the bad news on the global economy. And then inflation later as the money helicopters really fly. So we'll see.
What are the contra Lobo data points that could?
Well, US GDP, I mean, I could say, oh, they missed. They said it was going to be 3%. It was only 2%. Woohoo, they missed. But that's not, 2.8% really for a large advanced economy, supposedly developed world economy like the US, 2.8% growth ain't too shabby. And of course, as an Austrian oriented economist, I think GDP is a flawed measure to begin with. And, it's adjusted for inflation. And I think that the CPI numbers are, a load of dingo's kidneys as well. So yes, I get that. But still, these are the numbers that, institutional investors and most retail investors make their decisions based on. The companies make their decisions based on these. So it's just not useful to say, oh, all those numbers are BS, I'm going to ignore them. We participate in a market that doesn't ignore them. So yeah, that would be a contra Lobo indicator. The initial jobless claims have been falling. They did blip up again just today as you and I are recording, but the trend for the last month has been down, which is interesting. Still roughly, down from a very high place, and still, I think, overall, in the context, elevated, but trending down. So that would be contra Lobo. But overall, no, there's leading economic indicators again, right? Number after number keeps showing this weakness, and the credit card delinquencies, all these other things. There are clear signs of stress on the economy from what the Fed has already done. I think it's behind the curve. Now, sorry, but because I do think that whatever happens, and by the way, whoever won the election, it was inflation versus a lot of inflation, according to the mainstream. I think who got labeled as a lot of inflation, they might have got it backwards. But it's either way. It was inflation or a lot of inflation. So I understand that from the mainstream economics perspective, I think Powell is behind the curve in cutting. Like he should have cut more sooner. He was late, hence the 50 last time. But based on not mainstream economics, my view and the inflation that's coming, he shouldn't be cutting at all. Right. So they're behind the curve from where they were, but I think that they're going to be behind the curve again as they cut, because I think inflation is not as dead as has been declared. CNN declared that the inflation is beaten. So that's a contrary indicator that I'm happy to take. And it's not just me. Druckenmiller just put out an interview where he said much the same thing, that he thought he was worried. He was very diplomatic. He was worried that declaring victory on inflation was premature.
Yeah, my good friend Patrick Kareem from North Star Bat Charts, he did a little experiment on ChatGPT, and any one of you guys could do the same thing. You go to ChatGPT and you type in, give me a list of all of the past recessions and give me the actual start date, and then give me the called start date, so the announced date. And what you'll find is that for most of these recessions, by the time they announce the recessions started, the actual end dates already occurred.
Yeah.
Like you guys can go do it yourself.
Think about the 818,000 jobs that were revised out of existence 2 months ago. That was a yearly revision. And by the way, not the final for those same numbers. So, we had to wait a year just for that number. So in a way, I'm not excusing it, but I can understand why it takes so long for the NBER to declare these things. They're waiting for these revisions. They're waiting. Meanwhile, in the real world, people on the ground can see what's going on. And not to make a partisan statement here, I truly don't mean it as a partisan statement. I'm a libertarian. I'm not a Democrat or a Republican. But just look at what the American people just said. They called BS on the current administration and all their lapdogs in the mainstream media that kept on saying the economy's doing great, the economy's doing great. What's wrong with people? Why don't they get it? The economy's doing great. And what's really interesting about this is that, and to be fair, Peter Schiff pointed this out in his podcast last night. He reminded me, it's true. I remember this. That was exactly how Trump won last time.
Yeah.
Everybody was talking about how great the Obama economy was, but the average person wasn't feeling it. And lo and behold, a person, a champion of change comes in, whether you like him or not, he's a blowhard or whatever, you love him, doesn't matter. He represented change. And that's exactly what happened this time. And one of the oldest tropes in politics and economics, both combined, is it's the economy stupid, right? Going back to the Clinton era, the first Clinton era, right? And so, that was just demonstrated again in spades. There are so many people who objected to Trump on XYZ grounds, but at the end of the day, it was the economy stupid. And to me, as a speculator, in a way, the election is a vindication of my thesis that not all is as well in Mudville
That's
as
true, yeah.
that we keep claiming. The American people just voted with me, not for me. And I didn't vote for Trump because I'm a Puerto Rican. I can't Trump my vote anyway. But but economically, the American people just said Lobo's right.
Yeah, because they're feeling the pinch of inflation. We may already be in a recession right now. They could be feeling that pinch, and their vote is a consequence of that reality.
Absolutely.
What are the effects of a Trump administration, do you think? A second Trump administration. How does he change the game at all?
There's so much euphoria out there, and I'm not into electoral politics. There are many ways to act politically. And voting with your checkbook is one. Voting with your feet is another. That's why I'm here in Puerto Rico. I'm a legal, not illegal. I'm a legal tax protester down here. But in this case, in this election, just the idea that Elon, courtesy of Trump, could do 1/10 of what he did to Twitter to the federal government, that would tempt me to get on an airplane and fly to some U.S. state, register to vote that day, and vote for Trump. Just never mind anything else.
And he's courting Ron Paul. Did you see that? He's courting Ron Paul to join him in his.
Well, yeah. Did you see that meme? Elon tweeted a meme of himself and Ron Paul sitting there in that famous scene from the movie that job liquidation. So what is it you do here? Right, both of them, Elon and Ron Paul. Can you imagine the Elon Ron team running amok in Washington with Millei's chainsaw? Okay, I'm getting excited because that's sort of my libertarian fantasy. And, in real life, it seems like nothing is ever as disastrous as we imagine as a result of an election, and nothing is ever as great as we hope as a result of an election. We've yet to see whether the House remains red. And remember, last time Trump started out, he had both houses of Congress as well, and he still didn't really do pretty much anything that he said he was going to do in the campaign early on. The best thing that happened from Trump 1.0, according to a conservative perspective, would be the impact on the Supreme Court. That really did change a lot. And for a lot of people who would be gun rights advocates or abortion, that's their main issue, or even just fiscal conservatives, having the Supreme Court full of more conservatives did make a difference. But in terms of policy initiatives, Trump didn't initiate policy for gun rights or anything else. The Supreme Court took up that decision without any initiative from the White House. So the abortion issue, right? So and Trump fans hate it when I say stuff like this, but these are just the facts, right? A politician, how do you know when they're lying? Their lips are moving. And I mean that for all of them. So we got a bunch of campaign promises. They're campaign promises. What rational person expects campaign promises to be kept? Would we continue to see the Supreme Court be moved in a more, cautious direction? That we could see. Will he really unleash Musk and Paul on Washington? Well, in the first place, you can't really. I mean, you can't appoint somebody a government czar. Elon's not going to resign all his CEO status. He can at best be an advisor and whisper in the ear of people who are actual cabinet members. I mean, I'll be very surprised. I cannot imagine Elon giving up ownership of SpaceX, which is regulated by federal agencies, and Tesla, which, subsidies and regulated by, all this stuff. It would just be too destructive to his empire to actually become a government employee. So I just don't see that happening. So his influence will be through influence, suggestions. How far can he go with that? I don't know. All I'm saying, I'm not trying to rain on the parade entirely, but I am sort of a professional rain cloud over investment parades. I'm the guy they call when they want somebody to rain on the hype on, whatever latest exciting metal it is everybody's all crazy about, right?
Just pour a little Lobo on top of it.
That's right. Yeah. So all I'm saying is, get a grip. Even if you're excited about the victory of your side, breathe deep, understand that, politics always disappoints. And that doesn't mean nothing good will get done. Like I said, if Elon could do 1/10 of what he did to Twitter, like that would be huge. I don't even expect 1%. But if Elon can, and the executive can fire people, right? That isn't something he doesn't have to do by Congress. And so it'd be very interesting to see if Elon can get Trump to tell whoever he does appoint to run these various agencies, you will fire 10% of your staff within 3 months, or you are fired, right? And then we'll see what happens. Something like that could create an interesting savings. But anyway, I think the main takeaway really, we can speculate about what will or won't get done, what parts of the campaign promises have any chance at reality at all, who knows? But what we do know is that Trump's agenda is inflationary. And there's a lot of goodies promised to a lot of people. I hate taxes. I'm all in favor of people not having to pay these taxes. But if they don't come with budget cuts, real budget cuts, I mean, if Trump does go all in on the government and does fire some people, but not really enough to make a difference, and really the salaries of the government employees, that's not the big expense. I mean, that's nothing like the Medicaid, Medicare, expenses. Those big, the interest on the federal debt. I don't know for certain, but it's one of the, it's the top two right now expense items. So you could cut all federal salaries, and it wouldn't matter if the interest on the federal debt, goes up again. It could be swamped in that. So making the real changes, the real painful changes, touching the third rails of politics, that would be really difficult. And not doing that while cutting taxes just makes the fiscal situation worse, right? Debt to GDP goes up even higher. And you could end up, this is not a prediction. Again, I'm not beating on Trump. I think the other side would have been just as bad. But you could have the bond market vigilantes balk, and you could have a trust type moment if Trump succeeds at cutting taxes, or he pushes too hard on the tax cuts while the spending glut goes up. I don't know how that will work. All I'm saying is that there are danger signs here. The one thing that I'm highly confident of is that in any of the likely or even least unlikely scenarios, they're all inflationary. Right. And that makes me, very happy to be long gold and silver, looking to be even more long. And with Elon whispering in Musk's ear, and Elon strongly pro-nuclear, I think that's bullish for uranium too, even if Trump himself has expressed concerns about it. So basically, I think the Trump win supports my agenda or my portfolio. And then one question mark is, what happens with industrial metals? Is the economy as weak as I think it is or not? And we already talked about that.
Yeah, there's a few on X that have, changed the sentiment as it relates to gold and silver. They tend to think gold and the precious metals may not do as well now with the Trump administration, just because he may handle the economy better. We'll see. But what do you think of that?
Yeah, well, there's a huge correction yesterday,
change?
Right? Gold drops $80 in a day. Yeah. So of course the bears are coming out of the woodwork. But to be fair, it's not just Johnny come latelys or bears coming out of the woodwork. There have been a lot of people who said, look, gold's pulled a hockey stick. Some correction here would be normal and even healthy. That's typically my call. And I haven't like with uranium last year, when it pulled a hockey stick, that's usually me saying, well, it's gone up a lot. Taking some profits here wouldn't be bad. And I haven't been that way about gold just because I'm unusually strong in my conviction. It's just like I don't see what smacks gold down right now. I mean, I think the people who sold purely, obviously on the election result, that was crazy. And I don't think that a lot of people really sold. They didn't say, "Oh, Trump won, I'm going to sell gold." I don't think that's really what happened. I think the dollar spiked. The Trump and I think that was wrong too.
Point. Yeah.
But because of tariffs and what happens to the EU as a forex issue, the way the algos are programmed, the inputs made the dollar surge, and gold went in reverse to the dollar. I think it was really more than anything else, multiple factors. But I don't think people at large called up their brokers and said, "Hey, I want to go lighter gold because Trump won." I just don't see that happening. And lo and behold, as you and I are recording, we haven't quite recovered from yesterday's downturn, but we've got a significant upward move.
Yeah,
again.
But we're back above the 2,700 handle.
So it was wrongheaded. I think it was a mistake. I think it was an opportunity. Personally, I doubled down yesterday, like literally, on one of my gold stocks that was on sale, and I bid on a silver stock. I didn't get filled because it went up before I got there. But I looked at that yesterday, and there's rare occasions when you see the market move in a big way for the wrong reason. Like, this is just silly. This is wrong. And I don't have numbers for this. I can't give you a statistical result, but for what it's worth, my gut on this is that when those things happen, and I'm fortunate enough to be liquid and be able to act at that time, it always works out well. So we'll see.
Hey guys, quick pause. I won't take too much of your time, but if you're looking to add into your gold and silver stack, please consider Miles Franklin. More specifically, email them, info@milesfranklin.com, and tell them that Capital Cosmos sent you in the subject line to unlock special pricing that you won't find on the website. In the unlikely event that you don't like the prices, you could always not buy. There's no commitment necessary, but I do recommend Miles Franklin for a number of reasons. The customer support is top-notch, the prices are great, and I know the people there. Great people all around. So with all that said, let's get back to the video. Thanks, guys.
So the main takeaways are, I absolutely understand why people are saying, "Oh, we got to 2,800. It's rolled over a bit." It could. A lot of people out there saying, "Oh, it could easily go down to 26, 2,500 before going up again." That's a very reasonable thing to say. Sure, it could. And you know what? If gold goes all the way down to 2,500, are you kidding? 2,500 is a great price. You have to be a really crappy miner not to make money at $2,500 gold. Unfortunately, we do have a lot of crappy miners out there, so stock selection matters, due diligence matters. But it's not that hard. You can look at people's results and see who's making money, what are their costs like. I can help with that, but you can actually do this at home. Look who's consistently making money, delivering the bottom line. Anything like that. I think would be a gift if we do go down to 2,600. Think about that. A $200 retreat or $300 retreat in gold, that would cause panic. That would have people selling. That would have people calling their brokers. "Oh, gold's peaked. I'm out. Get me out. Get me out." Right? That I can see causing stocks to go down much more than gold drops. But it doesn't mean that this bull market is over. And I would be out there, buying with both hands. I would, I never go all in, but I'd be as close to going on all in on such a move as I ever get. I'd have a garage sale if I could to raise more money to buy on such a move. But here's the thing. While all of that is eminently reasonable, that's not a crazy thing to consider or plan for right now. I'm not at all convinced that that's going to happen. I mean, an $80 in an afternoon smackdown that we had yesterday, and we're already almost halfway to recovering that right now, at least as you and I speak. There's a lot of appetite out there. And I don't think the central banks that have been buying gold all year are going to say, "Oh, Trump won. We don't need any gold anymore." That's not in the cards. And, sorry, Trump fans, I don't think Trump or anybody ends any war in a day. Even if Trump calls Zelensky up and says, "Dude, you're on your own. You're not getting another penny out of us, so you better go negotiate with Putin." I don't think he will. I think he'll go to the Europeans and say, "Hey, You want Russia to take a bigger chunk of ground on your border or not? Help me. I don't see this optimism of the wars ending soon as being the most likely, outlook going forward. So what I'm saying is, all the reasons that have supported gold, so much earlier this year, I think they're all still on the table, regardless of the election. And going back to our very first question, if I'm right about the economy, that's very bullish for gold. So we're going into an economic scenario. The macro is bullish for gold, and we're still over 2,700 going into that bullish scenario. So no, I'm not selling all my gold stocks. I'm not trying to get out to buy lower, buy cheaper later. I am building cash from other areas so that if we get that buying opportunity, I'll be ready to take advantage of it. But, it could be, who knows? What will the exchange rate be by the time you post this interview? But it could be that the damage we saw yesterday is the worst of it. That was the dip, and the next big move is upwards again. The world is scary enough for that to be just as reasonable an outlook as the bigger correction. Do I know which it is? Absolutely not. But my bias is look, if I bet, if I actually move my portfolio, if I change, if I start selling things because I think a correction in gold and silver is more likely, and I'm wrong, I will be kicking myself from here until, 10 years from now. Whereas if I bet that the next move is likely up and it is down and I get that correction, yeah, well, I won't be worried about it because I'm not thinking that was the peak and it's going to be down for the next 10 years, right? Then I'll buy that dip. I have cash ready to do that. I'm not stuck. I haven't made, I think, a permanent mistake. The only way I make a permanent mistake here is if, in fact, that $2,800 on the futures contract was the peak for this cycle, and it's downhill from here for like the next 5-10 years. If that's true, then my guidance right now is wrong, and anybody who listens to me is going to lose money. But I don't think that's true, and I'm putting my own money where my keyboard and where my mouth is on this right now.
Does the same prognosis apply to silver?
Yes. Now, silver might actually, in a crazy way, might be a better bet than gold in that sense. Like if I'm wrong about the safe haven and the economic troubles and all those things that are good for monetary metals, that's actually bullish for silver as an industrial metal. So silver may have more limited downside than gold on the basis of its dual mandate, if you will, on Fed Day.
Interesting.
But that's, I don't see the industrial demand taking silver to triple digits. Whereas, that a safe haven fear type spike, that could do that. The industrial demand is more of a steady thing. And, even if I'm wrong and the economy the soft landing is achieved and it's going to, start gaining altitude again, that doesn't go vertical overnight. That's not going to take silver to $50 next week. That's just going to support silver while gold is going down. And, we'll have to see where it goes. At plus $30, again, all but the crappiest silver miners are making money here. So it's not like production of silver is going to be hurt if silver goes down following gold. If silver holds on where we are now while gold goes down. So, there's some nuance there. And by the way, if I'm right, that's, makes me potentially nervous about the economy, right? Which is, more bad news. Then that makes me more nervous than about silver than gold in the near term, because the bad news would hit silver's industrial side. But on the other side, when the money helicopters really fly with gusto, then silver gets both tailwinds. They get the reflationary boom tailwind plus the monetary metals tailwind. And so, people like to beat up on me for not being as loving of silver as I am of gold. But hear what I'm saying. After the recession has done its worst, or I'm proven wrong about the recession and it's off to happy days again, I think silver has more upside potential than gold. So different risks, different upsides, different scenarios.
Yeah. So earlier on in the interview, you said if you were wrong, i.e., we don't have a recession, then you anticipate copper being a beneficiary of that. Why is that?
Well, people get all obsessed about, electric cars, and, some people hate them, and, they rejoice every time there's bad news for Tesla or whatever. But remember that copper was called Dr. Copper for decades before this whole EV thing came along. And even with or without electric cars, electrification of the world isn't just about the cars. I mean, there are billions of people who don't have the kind of electricity and water and other infrastructure that we take for granted in the first world. So the electrification of the world is a huge multi-decade megatrend that's happening anyway, on top of which this, electric car thing is a tailwind. So I think copper has sold off recently, particularly news out of China. It sold off yesterday along with basically everything on the Trump win, which was almost irrelevant, I think. Okay, yeah, Trump said that he was going to repurpose or rescind the funds not spent yet from the grossly misnamed Inflation Reduction Act. And okay, yeah, he wants to build a wall, and that won't have as much copper as whatever the Biden Harris administration would have spent it on. But I doubt he's going to send that money back to the taxpayers. It's going to get spent on something else. And the world is still going in this direction. Even if drill baby drill is the Trump mantra, and we have a lot more fossil fuels in the US, people are still buying electric cars. And if they stop buying them in the US, they won't stop anywhere else. I mean, heck, you can put 100% tariff on a BYD car that sells for $10,000 in China, and it's still going to be cheaper than any ICE car you can get, in the US or almost anywhere else. So those electric cars are going to get made, whether Americans drive them or not. And that is going to add this copper tailwind to the general industrial and civil engineering demand for copper that's there anyway. Copper, like iron, steel, you're going to consume more and more of it as long as the population is growing. That's just the way of the world. So the fact that it's relatively on sale now, as is oil, by the way, struggling to hold 70, both of those are mainstays, like absolute essentials to our civilization, to any economy. They call oil black gold for a reason, right? So both are on sale, both are necessary. So if I'm wrong about economic bad news near term, then that means economic growth near term. And that's very bullish for both of these essential economic ingredients. So yeah, I would like, when we got off the phone right now, I would go call my broker and place orders for any great oil and gas plays that I thought, or sorry, not gas, oil and gas, oil and copper plays that I thought were on sale, oversold, something like that, that I had done my due diligence already, had my shopping list ready to go. I would act on that right now, but that's not, my outlook. So I'm not doing that.
I see. Why not gas, by the way? What do you exclude?
Very different market. It's not globally fungible the way oil is. Like even Iran with sanctions can sell its oil anywhere in the world. They sell it to India, then India, distills it into diesel and sells it back to Europe or whatever. So that's a globally fungible market, which makes the sanctions and other difficulties, really porous. Whereas gas, it's not about the sanctions, but the point is that since it's not globally fungible, you have to compress it into LNG to make it as fungible, to make it to where you can send it wherever you want in the world, like oil. And that takes energy, takes facilities, and so on. And we're building out that capacity, but we're not there yet. This is why you can see gas prices go negative in the US. If there's a pipeline rupture or something, you'll see negative gas prices at the same time that it's $8 or $9 in Europe. Right? Because it's not a globally fungible market. You can't just teleport your gas from the Permian to Leipzig or whatever. So it's tricky. And there's a lot of gas. There's a gas glut right now in the US. And if I was wrong about the economy, i.e., if the economy is about to boom, then it's not a certainty that natural gas will go up right away. It's a question mark. We have to see how the market balances. Whereas for me, oil is not a question mark. It goes up right away. Whereas natural gas, let's see how the glut is dealt with. And if I'm right about economic trouble, then it doesn't matter if gas is already dirt cheap or too cheap or stupid cheap. it can and will go negative. It shows us that it does this periodically anyway. So, in a case like that, stupid cheap is not a protection from further downside.
Understood. I want to ask you one more question, Lobo. Why do you think there's been this sort of rebellion in the bond market relative to the Fed funds rate? The Fed seems to be fighting one battle, but the bond market kind of seems to be going off on its own.
Yeah, well, I'm not a bond king, and I would just defer to the Gunlocks of the world or somebody who knows that better. I should probably just leave it at that. But let me just generally say, as a generalist investor and speculator looking, when a market doesn't react the way the powers that be or the mainstream talking heads on financial media think it should, and they're scratching their heads, that's a really interesting market signal. And my general perception is that when that happens, it's basically, it's a market of one kind or another calling BS on an official interpretation or statistic. So this is interesting. If the bond market vigilantes are in fact not dead, we saw that they weren't in the UK 2 years ago. If they're not dead in the United States now, we could be headed for some very interesting times if the markets call BS on whatever the official numbers are.
Yeah, interesting times indeed. Anything else you want to talk about, Lobo, that we didn't get to before we wrap up?
Sure. Just real quick, it is tax loss season coming up. Here we are in November. It's one of those volatile years where it's not clear, like where if everything was down, people would have a lot of tax losses. They try to, or if, if everything was up, then they'd be looking to offset. It's kind of a mixed year. So I don't have a strong feeling that there's a huge rush to the exits on tax loss season this year, but it is something to keep in mind. And, some of our favorite metals have done really well this year. Some of our stocks have done really well this year. Some of us do have tax losses to consider harvesting. And so two things. One is if you've got underperformers in your portfolio and you've just been holding on to them because you can't bear the pain of, taking the loss and moving on, remember tax loss season. There is a bright side here. Just stiff upper lip, grow up, face the music. I made a mistake, sell the loser, take the tax loss, and offset it with some of our big wins on something else that we've had this year. And then also remember that this is a source of opportunity. If there's a company that's done well, but the commodity is down, they've built a new mine and it's not their fault that the lithium market went down this year. And I don't mean anybody to go out and buy lithium. It's just an example that came to mind. There could be some really good companies that are doing well, but for market conditions are down, and then they get whacked with tax loss season at the end of this month, most likely, or early to mid-December at latest. Very few people put it off to the very end. So that could be a buying opportunity. And if you don't mind my saying so, I do have my take service where we evaluate almost 1,000 companies now. So if you're scratching your head what to buy or sell or hold during this tax loss season, we can help with that. But whether you hire me that way to be your due diligence guy or not, don't forget tax loss season. This is the time to rationalize your portfolio.
Totally. Yeah. Where can people find you, Lobo?
Independentspeculator.com.
All right. We'll have the link to that down below. It's also right above Lobo's head, as you can see there. Anything else? Anything else, Lobo? Is that it?
No. Right. By the time we get to this question, people stop listening. So have a great day, everybody.
All right. All right, guys. Thanks so much for watching. Catch you guys later. Subscribe to the channel if you haven't already. If you got value out of this, like this video if you enjoyed it. Comment down below. Go, Lobo, go if you agreed with what Lobo had to say. If you disagreed, however, do leave a comment. Let me know what you disagreed on. I do read the comments, so I'm really interested
to see. By the way,
yeah.
Sorry to jump in. I can't always reply to everything, but I do go back to these interviews and look. And if somebody has an intelligent pushback, that I do think about that. And sometimes I'll reply, but at least I will think about it.
Yeah, yeah. So leave a comment if you disagreed at any point. We do read the comments. And support us on Substack, capitalcosm.substack.com. Link to that is also down below in the description box, as well as the pinned comment. And with all that said, thank you guys for watching, and I'll catch you next episode. Bye, y'all.